Rage boils over in the streets of China, a political dispute with Japan over territory spreading into a massive trade relationship and hurting Japanese firms. Shares in carmaker Nissan dropping after it suspends production in China for 2 days. Fast retailing down as it temporarily shuts 39 of its Uniqlo clothing stores. And construction equipment maker Komatsu losing ground as it halts work at 3 plants. All firms hoping they can avoid damage to their facilities, staff, and reputations. Investors also hoping the fallout will be short-lived.
I think in terms of the equity market reactions about Japanese stocks, it's just a blip. But in terms of imports-exports trade, it could have a bigger impact.
Despite the two countries' tense history, China has become the largest export market in the world for Japanese firms. Bilateral trade last year alone reaching $340 billion. Many Japanese companies have built large factories in China, capitalizing on a cheaper labor force close to home. And retailers have jumped into the world's fastest-growing consumer market. Recent data suggests the pace of investment going into China has slowed. Rating agency Fitch says the dispute may hurt the rating of Japanese auto and tech manufacturers. But looking ahead, analysts bet the going is too good in China for companies to stay away.
It will be good for Japan to continue to establish factories, operations in China to sustain the demand potential, which is beneficial to Japan. I think in the medium to long term, Japan will try to take every opportunity to expand the market in China again.
But on Tuesday, businesses were hunkered down. The violence, a reminder of just how sensitive relations can be between two powers with a difficult shared past. And while some Chinese companies attempt to cash in on the patriotic fervor, others are anxiously awaiting a return to business as usual. Tara Joseph reporting for Reuters.